Hello and welcome to the Alt Asset Allocation Podcast. Today's interview is with Martin North. Martin runs digitalfinanceanalytics.com and is an absolute guru on all things Australian and New Zealand markets, especially the real estate market. We talk about Australia and New Zealand, the economy, investment mindset of the investors there, and the financial markets, government response to COVID. We talk quite a bit about these markets. But we actually get quite philosophical on where the world is now as a result of COVID and where we could potentially be going. Things like the Great Reset are being thrown around, but what other options do we actually have? The little changes and freedoms that we're giving up now, keep playing those out, teasing that out a little bit further, and it's pretty ugly where we end up going. Martin is a deep thinker, and I really enjoyed this conversation. So I get a lot of listeners on this podcast, but I really only have like 30 reviews on Apple Podcasts. If you're listening and you enjoy this, please take a second and drop a review if you're getting some sort of value from this. It really helps. If you're watching on YouTube, hit subscribe. I'd really appreciate it. Okay, once your review is done, I hope, please enjoy this perhaps a bit uncomfortable to think about conversation with Martin North. Enjoy. Martin, welcome to the show. Excited to have you on today.
It's great to be with you, and thanks very much for sharing some time with me. It's 30 degrees here, 10 a.m. In Australia, just to show you that we're on the other side of the world, right?
Yeah, you're in the future. So what does Wednesday morning look like? It's still Tuesday afternoon here.
I was really, it was really interesting, right? Because everybody was saying, oh, look, 2020 was a disastrous year. 2021 is going to be just so much better, right? And here we are, 2 weeks in? No. It's the same recording.
Well, I mean, the rest of the world doesn't just stop things that are happening because of a calendar date, right? And this is I think this is the harsh reality. It's probably starting to hit now. This is being recorded January 12th. So I think people are starting to realize you can't just leave behind everything that was happening in 2020, and it's a new year, so fresh start.
It's a nice sort of philosophical, if only, but the reality is that the economic fundamentals that we had last year are precisely the same as this year, that we've still got all the issues to do with the virus and everything else. And, therefore, I think there was a lot of hyping from the media about, new year, new start, but actually new year, same old, back to the future.
It's very, very true indeed. But at least there are some things that are starting to look up, perhaps.
A few things are beginning to settle, perhaps. Yeah,
so it's a silver lining with every storm cloud, I suppose.
Exactly.
Right?
Exactly.
Well, this is a little bit of a different interview, and we talked a bit before we started recording. But like a lot of my listeners are based in the U.S. We're looking at the U.S. markets, U.S. investments, and you are an expert within Australia and New Zealand. So very different, other side of the world, different day. But the content that you're producing, you really know what's going on. So I think it'll be a really interesting conversation to know what's happening on the other side of the world and what's driving that economy happening there, and then what can we learn from that market in relation to our own portfolios. So we'll get into all things real estate and Australian economy, but let's start off a little background on you and what you do.
Sure. Well, Digital Finance Analytics is my core company. And what that is essentially is a set of analytics based on household, consumer, and small enterprise business surveys, right? We've been running them since about 2002. And what we try to do is to get really granular into what's going on. So my frustration was a few years ago, I used to work in the big end of town, big consulting firms and big banks. And there was a lot of high level statements being made about the way the economy was performing, what people were thinking, what businesses were doing. But it was also high level. And so I decided a few years ago to start carving out a much more granular view of what was going on. So I run continuous surveys, and that information then flows into what I call my core market model. Now, my core market model is effectively a simulation of the Australian economy. And so we're trying to put all of the information that's coming in from all the sources that are available and then look at it granularly. So, it's very important to move away from high-level statements about what's going on to a much more granular view. So it's a really granular analysis. That then leads into some insights. And then over the last 2 or 3 years, I've started to feed those insights through my blog, which is at digitalfinanceanalytics.com, but also my YouTube channels. And so I run daily shows on YouTube called Walk the World. And there we discuss all of the things that I'm seeing. And I run sort of weekly live shows and daily updates as well. So it's turned itself from being a purely analytical task to being a much more educative task, because it's clear to me, having spoken to a bunch of people through my surveys, is that the level of understanding is quite low, certainly here in Australia, and I think in New Zealand as well. People are being swept along by the spruikers, be they property spruikers or gold spruikers or Bitcoin spruikers, particularly on the social media channels. So what I'm trying to do is to bring a semblance of order to say, look, here is what the data is actually saying at the moment, right? And then we move from there to say, well, if that's what the data is saying, here's some things you might want to think about. But I don't make specific recommendations. I don't give financial advice. I'm not trying to sell anything. What I am trying to do is just lay some goats and lift the level of awareness so that people can make better decisions for their own financial futures.
Nice. And you used a term that I've never heard before, spruikers. I imagine what it means, but what
that's
does that mean?
Australian term, which basically says there are people who are saying, property markets never fail, right? There's a school of thought that says property prices in Australia double every 7 years, right? And it's amazing how often that gets trotted out, right? And there are websites and other social media sites and even some of the mainstream, newspapers who are basically also own real estate portals, all spruiking, in other words, encouraging people to go and buy property, and the government's doing the same. We'll come on to that, right? So that's what spruiking is about. And if you go onto YouTube and listen to, there are people there saying, no, the future's gold, right? You should be holding gold because basically the US dollar is going to collapse, and therefore hyperinflation, therefore you need gold, right? And so, but when you actually look at them, they actually own gold companies and they sell gold to people and they make money from selling gold. So how objective is that advice, right? Same on Bitcoin, right? There are people sort of talking about Bitcoin and how Bitcoin is the future. Of course, it went very high. It's come back a bit now. All of these things are because I know people are very passionate about a particular dimension, right? But it can easily fall over into, frankly, a commercial model, which means that you can't really take what they say as being clean and clear, right? That's what I mean by spruiking. So essentially, it's trying to persuade people to do something, and they'll put information up and they'll make an argument, but they don't necessarily declare all of their interests. And that, I think, is a problem.
Absolutely. No, that's exactly what I figured it was, but I'll use that term now. That's great.
Well, it's an Australian term, but I think it deserves to go around the world, right?
Yeah, absolutely. I mean, it's prevalent in a number of things, right? It's talking your book. It's financial advisors that make money from churning your accounts. It's like all of these things. It's misaligned incentives and lack of disclosures.
Absolutely. And it's worth saying, I think, my training actually is I'm a philosopher by training. So I went to Oxford and spent some time doing philosophy. So I always want to ask the next question, right? Which is, what is behind the statement that is being made? What's the assumption that's being made behind the statement, right? And then you start peeling back the onion and you realize that there's a bunch of other things going on below the waterline that you never dreamt was actually going on, right? And that's what I'm trying to get to. So I'm trying to lift the level of awareness and understanding simply by asking that next question. But why are they saying that? What is it that's driving that particular perspective? And that takes you into some very interesting areas. And by the way, you can trip over quite often because people say, well, no, my worldview is very different, so I don't agree with you. But that's okay. Let's understand that everybody carries around their worldview, their set of assumptions about the way things are, right? Sometimes it's good to just question those rather than just carry them around as a set of implicit assumptions that you never actually get exposed. And that's partly what I try to do on my channel.
Awesome. Yeah. Well, I mean, we have to have these lenses and these mental models to understand the torrent of information that's constantly coming. You have to have a way to kind of put them nicely in their places so you just don't lose your mind every day, right?
Well, and the fact is, everybody has one. Right? It's a matter of survival. You need a mental model. Evolution gives us that to be able to survive. Because if you had to stop and think about every decision and everything that was going on all the time, you wouldn't move, right? But there's a natural set of filters that go on, and you sort of say, oh, that's a person, so I might take more interest. You ignore the rest of the environment you're in. But it's the same with everything else, right? You have to actually understand that there is a set of assumptions that actually are wired into the way that you think about things, right? And it's fine, and that's necessary, because otherwise you wouldn't move. But sometimes it's really important to question the validity of those assumptions. Say, well, what if I'm wrong? What if that particular assumption that I'm making is actually incorrect? So, go back to the gold
Right.
Bitcoin conversation, right? If it is true that the US dollar is likely to degrade in terms of its role as the support currency around the world, and if it's true that inflation is going to come raging through, then sure, gold might well be an answer. The question is, those two assumptions are really big assumptions, and very often they're wired into just the way that people think, so they don't question.
Absolutely. I mean, and even asking what assumptions am I even making? Because they're so baked into the way that you perceive
Correct.
the world and the way that you think through things that you've gone so far that you don't even realize that these are really large assumptions that are impacting a number of follow-on decisions.
Yeah, and what's interesting is sometimes you'll have a discussion with somebody, right, and you realize that you're never going to agree with that other party, because their basic assumptions are different to yours, right? And so even whilst you might think you might be having a discussion here at the middle, right, the world views are so different that effectively you will never come to a common understanding. And that really is both frightening but also quite interesting, right? Because what it says is it's really important to understand some of the bigger picture stuff.
Fantastic. And I didn't want to go too far down that tangent, but you said you didn't want to give investment advice, but my God, what good broad investment advice is that, to question your assumptions and think through like the second order effects of these
Yep.
assumptions and how they impact your investment portfolio. So I am
and,
glad we
and
went
and
there.
very important, question the assumptions of those who are actually giving advice to you, right? What's driving them? What's their motivation, right? What are they really trying to achieve, right?
All about
That is
incentives.
probably the most critical question of all.
Oh yeah. Oh yeah. Well, this is the first time I've gone into a more philosophical, quite right off the bat, but I do appreciate it. That's for sure. I love these discussions. But this is also the first episode that I've done with somebody that's very New Zealand, well, Australia, New Zealand specific.
Mm.
And I love the data-driven approach that you take. So let's back up a bit. And I mean, this is kind of the benefit is you're analyzing all of this data and then presenting it via your blog and YouTube channel in a more palatable way. So let's just start off a little bit more macro view. What's happening in Australia? What's happening in the Australian real estate market, and then go from there.
Okay. Yeah. So it's been a pretty interesting ride over the last 2 or 3 years. If you go back pre-COVID, so January last year, the Australian economy was slowing. Unemployment rate was rising a little. House prices were wobbling. They'd been quite strong from, let's say, 2000 onwards. We had a very slight wobble through the global financial crisis, but hardly any falls, nothing like you had in the US or indeed in the UK. So we've had very strong home price growth, and we were basically watching it pretty stable with slight moves up, right? And the government pretty much declared that they would be out of debt. So they said, right, we've actually achieved our objective of repaying the government debt, and therefore we are now going to be in the black, and therefore we're going to keep our spending under control, and that will lay a nice foundation for the next 3 to 5 years. So that was the that was the story, December, January, and then something happened, right? Which of course was the virus, and so we had wave one. We had significant lockdowns here in Australia. It was actually remarkably quick So the borders were closed, which stopped people coming in. The state borders were also locked down as well in some places, so people couldn't move. And you know, we were really pretty firmly locked down. New Zealand did the same. In fact, New Zealand was earlier than Australia. So there was a very significant freezing of activity. As a result of that, the government then announced very considerable support. So there was a scheme that allowed people to get money from their from their employers. So money went from the government to the businesses, and the businesses then passed it on to people who were, so to keep them employed, as it were. They also lifted the level of support for people who were unemployed because unemployment started to rise. And there was a few cycles of this as the consequences of both the global and local situation came through. And about April and May, a number of the major banks came out and said, oh, we think property prices will fall about 30% over the next 2-3 years based on nobody's buying. None of the international buyers that were there and supporting the market previously are buying. You know, unemployment's going to be a lot higher. They were talking of maybe 10%, 11% unemployment. We'd been at about 5.5%. So it was a situation where we had a major switch. Now, we have a conservative government here, Liberal Nationals, and they've tended to want to keep government spending quite limited. Although actually, if you look at it under the covers, they've actually been growing government debt quite firmly, but that's another story. But philosophically, they had to turn completely on their tail and basically said, right, we're going to throw a lot of liquidity into the system. So they did tax breaks, they did these liquidity injections into businesses and also through unemployment. And the Reserve Bank, who is our central bank here, cut the interest rates. And we went from a reasonably low rate. You know, I think at one point they said, well, we'll never go below 2.5% or then 1.5%. And they cut the rates, and they've cut them now to 0.1%, the last cut a couple of months ago, right? So they were therefore doing that to try and control the yield curve. And it's the same strategy as the Fed and the other central banks around the world. They upped the ante in terms of their liquidity injections. They've announced they're going to do quantitative easing. And the other interesting factor there is that they have started to lend very cheap money to the banks to try and get the banks to lend more, right? So that's the sort of the journey that we've been on. The first lockdowns eased a couple of months later, and we got close to suppression or elimination of the virus in Australia. And so we started to see the first signs of some return to more normal activity within the country. Still, international borders shut, so no students, international students being a very large economic driver for what was going on in Australia. No international tourists, which was another big driver for the economy. So all of those things internationally was still frozen, but the local economy then started to recover a little. And then we had another breakout in Victoria. So Victoria is one of our main states. And so they went into another deep lockdown for another probably a couple of months in total. And that took us through the second half of the year into September, October, started to come out of that. And then since then, we've had a number of smaller spot fires, if you like, in terms of the virus, which means local closures, local lockdowns, more. So we've got this stop start thing going on, right? Now, the total infection rate is still very low relative to where it is in the US or Europe. But the economic consequences are very serious. So we've now got a government. Remember, I said at the beginning they were celebrating that they were in no debt. They're now expecting to have at least 1.1 trillion Aussie of government debt over the next few years because of all this stuff that they're putting into the economy to try and support it. So we've got a government that's turned from don't want to lend too much into the economy to let's throw everything in. Let's just throw it in. And of course, rates are very low, so they can say, well, the cost of that debt's quite low. The Reserve Bank has taken rates really, really low. They have also encouraged the banks to lend more, as I said, but also the government then said, well, we need to encourage people to go buy houses. So there were schemes both at a state and a federal level to try and encourage people to go buy new properties. And so rather than seeing a fall of 30% in properties, right, we started now to see properties beginning to rise again. And we started to see the property market in the middle of all of this chaos, in the middle of all the risk of defaults and all those things that are going on more broadly. Properties are actually going up in a number of areas. It is remarkable, right? And in New Zealand, who actually were at this earlier, property prices have gone higher than they've ever done in the last 12 months. It is crazy, crazy, crazy. But the problem is, and this is where I sort of come to the yes, but, right? Whilst you can support the property sector, and whilst the argument is, well, there's 1 million people who are actually working in construction in Australia, so we need to make sure that the construction sector continues to employ people. It's all about trying to support this wonderful Ponzi scheme that we've had in Australia for years and years and years. Property prices relative to income are some of the highest in the world. The debt that Australians have is some of the highest in the world relative to their incomes. And give you an example, typical debt to income ratio today, if you go get a loan, is 5-6 times income, right? Which is extremely high. So we've got this crazy situation where the government's strategy for solving the issues with regard to the virus has been pump the property market. And so now the expectation is that property prices could well rise by 5, 10, 15% over the next 2 or 3 years. So we've had this really big roller coaster. And the problem is that what we're seeing actually is what I call a bifurcation of the economy. So we've got some parts of the economy, think of it as a K, right? So one leg of the K is doing quite well. So where you've got government support and government incentives, doing quite well. But you've got this other group, and if you think about the total household count in Australia, there's probably 10 million households in Australia, but about 3 million are in this group who still have higher unemployment, have high levels of debt, are unable to maintain their mortgage repayments and rental payments. And so you've got this bifurcation. So essentially, what's happening is that the disconnect between the haves and the have-nots, those with savings and those with, for example, investments are doing quite well. Those without are not. So what's happening below the waterline is high government debt, a sort of pulling apart of the fabric of the society between those with the haves and those who have not. It's looking more and more like where perhaps the US was a decade or two ago, right? And Australia traditionally has been quite egalitarian, but it's falling apart. So that's sort of in a nutshell where we are. And New Zealand is writ larger still, because both Australia and New Zealand are very reliant on tourism. They're reliant on international students. Well, both of those are turned off. They are also, of course, reliant on some commodity exports. And the other factor to bear in mind, and the thing that's really saved Australia, but also has created another bigger crisis, is that the bulk of the Australian economy, internationally speaking, is digging stuff out the ground and sending it overseas, mostly to China, mostly iron ore. The iron ore price today is at 175 US, way higher than anybody expected. And so that has saved the Australian economy, and it will continue to save it for time. The question is, how long will that go on for? Because all this money that I mentioned earlier on has just been to support the property sector and short term. There's no long-term strategic plan for developing our economy into new areas and creating new innovation and those things. It's just what's sometimes called houses and holes, right? That's what the Australian economy is. Houses, because that's what people essentially are putting all their money in, and holes as we dig stuff out the ground and ship it overseas. So this economy is very narrowly based. If you look at it on some of the international metrics, I think we're the fourth most concentrated, the 40th most concentrated. So no, we're right down the list, right, with some African countries. Very little diversification, very small tech sector, very limited capacity to create innovation and new businesses. And my surveys of SMEs are saying, oh, well, we're not sure what we're going to do, because the other thing I will say quickly is that they turned off director responsibility for trading insolvent, and they turned off um, the need to actually close businesses if they were insolvent. Well, that's now turned back on again, end of the year. So I'm expecting small businesses who really aren't getting the support they need to start turning over. So we're in this sort of amazing, I call it Alice in Wonderland world, where the property sector's booming, right? And by the way, the stock markets around the world are booming, and everything else is looking pretty shaky.
Yeah. It's well, the markets have a way of making the logical thinking mind look silly, right? And this is just a whole new meaning to kick the can. It's like boot the can as far down the road as you can, and then hope that, you know, whenever you get up to it again, you can kick. I was living in Bali in March, and I had a visa run set to go to Australia. So I'm very aware of the first initial strict lockdown, because I was real close. I think 2 days from being locked down in Australia, which would have been, I'd probably still be there. So it's interesting to think through this. And I mean, there's a lot there to unpack, but the way that I kind of want to push this, and thank you, I thought that was an amazing recap, and you have a fantastic memory of all the events and things that are moving on this. You can tell you talk about this quite often on your YouTube channel, which I'll link to in the show notes. But I mean, I think that my key takeaway there, well, there's a number, but the one I want to go through is the government has been extremely accommodative. There's QE lending, supporting low rates, driving them down even lower, tons of government support. So I'd be curious on your thoughts of how much different this looks than the way that the US or other economies are fighting this pandemic, and where it's perhaps better or worse in the way that they're attacking it.
Okay, so I think there's two levels. The first level is on at the health end of the spectrum. I think we've been quite fortunate. Being on a big island, of course, it's a little easier to insulate ourselves. And we did put border restrictions in place quite early on. So international travel is banned. So unless you've got a particular reason to go overseas, you can't. So and so that's the interesting trade-off between civil liberties and trying to get the virus under control. And I think what was interesting in Australia, Australians tend not to be particularly compliant generally, but actually most Australians understood this was important and sort of accepted it. So we've got a string of barriers around the borders, right? And that's the first thing. And I think airlines in Australia were saying, well, we think it's unlikely that we're going to see international arrivals really ramping up for at least a year or two. They've started to change their tune a bit more recently, but they may just be a bit optimistic. So I think that was the first thing. So sealing the border and accepting the removal of civil liberties that actually represented was the first point. The second point was that the mistakes that they made in Victoria and indeed in New South Wales was not being completely strict on those quarantine regimes. So effectively the breakout in Victoria was actually because people who were in quarantine and being looked after in quarantine transferred the virus into the community. So they are getting stricter and stricter. So for example, they're now saying that aircrew, when they fly, and need to be tested, and people will need to be tested before they get on an aeroplane if they're coming to Australia, right? So this is a remarkable but probably quite necessary thing. That's the first thing. Second thing is they've had very good track and trace, particularly in New South Wales. So as soon as a virus outbreak appears, and there are still mystery cases that pop up from nowhere, people don't quite understand where they come from. But then they go into massive track and trace and then give you a whole long list of places. If you were in that particular place in that particular time, then you need to isolate, get tested. So over 14 days, you're locked down, but not everybody's locked down, right? And we had a recent outbreak in what's called the Northern Beaches, which is north of Sydney. And they ring-fenced the whole area and said, nobody in the Northern Beaches can go beyond the Northern Beaches. So that's the sort of strength or disruption, depending on how you look at it, that actually dealt with the virus. Yeah. So, is that the sort of society you want? No, not really. But the question is, it has worked in terms of we don't have the same spread of the virus that you do in Europe or the US. It's interesting, New Zealand actually went even further, and they did a very severe lockdown initially. They had a couple of breakouts beyond that around quarantine, but they've recently declared in New Zealand virus-free within the country, right? So they've still got the ring around the border. So it's remarkable that you can create effectively this eco space where effectively the virus is much more under control. So in theory, the local economy should be able to motor up a little bit more. But then you get this sort of, I don't know, you know what I mean by a whack-a-mole, but a whack-a-mole was a game where you have a head knock up and you hit the head and pop up with a hammer over there, right? That's what it's like, right? So you keep playing whack-a-mole. And I think we're going to go on playing whack-a-mole. The concern I have is that people haven't twigged yet that whilst you might get the virus controlled locally, because of so much of our economy is linked to the international community, right? For as long as the virus is raging in the US or Europe or Asia, the economy is not going to be normal. Can't be normal, right? So that's the sort of the first angle. The second angle then is from a financial perspective. We were late to taking interest rates down. We were sort of behind the Fed in terms of their quantitative easing programs. And in fact, in Australia, our Reserve Bank said, no, we won't need to cut rates anything like as much. Well, they are now, they have. So they were late to the party. They followed the same playbook as the Fed, I think. They've done pretty much the same sorts of things, which is yield curve control. And that's, with the bond issuance and all of those things. And I think the problem I've got is we've now got precisely the same problem as the Fed and other central banks, that we've got ourselves into this cul-de-sac of ever lower rates. But I can't see anybody talking about how you get out of it, right? Other than doing more quantitative easing. And I'd also of the view, and other people might disagree, that the quantitative easing program started after the global financial crisis. And it never solved that initial problem. So we've actually got a continuation, and just going ever writ larger. So how much debt is too much debt? Well, more than you might think. And so you've got this artificiality to both the US economy and the Australian economy. It's not really capitalism anymore, right? Because businesses are being supported and they're stopped from failing. The true value of money is all over the place. And if you look at a lot of corporates, we've got a lot of zombie corporates around there who are able to get really, really cheap debt and just keep buying back shares and things like that. And in Australia, interestingly, we had this government support, as I mentioned, to individuals via their jobs, a thing called JobKeeper. And interestingly, a lot of large firms actually reported excess profits this year because they got all this money from the government. And that meant that they were actually able to, pay supreme higher dividends to shareholders and to pay bonuses to the execs. So what's happened is a lot of the money that was created flowed into the big end of town. Now, I would argue that that's exactly what's happening in the US as well. That what you've got Absolutely. Is a support mechanism that's supporting the financial markets. It's supporting the big end of town. Consumers and small businesses, well, they might get a few breadcrumbs, but not. And it's really a complete distortion of capitalism. The idea is that capital goes to those areas where you can get greatest returns. Well, that's gone. I mean, we're not in that situation. We're in a controlled economic environment where effectively central bankers think they're so clever that they can pull these levers and just throw more liquidity in, and we're breaking more and more of the economic reality. And so I look at the Eurozone, I look at Japan, who've been at this longest, right? And I think we're going to see the Japanization of Australia. In other words, no real inflation, more like deflation. The central bank holding more and more assets and buying more and more bits of the economy. I think the central bank has something in Japan has something like 40% of the Japanese economy now.
Right? Or higher. I mean, it's just crazy, right?
It is. And they've bought stocks, shares, pretty much everything, right? And rates in Japan are negative, right? And so there's a big debate about, negative interest rates. And, the Reserve Bank here says, no, we're not going to go into negative interest rates, to which I reply, yet.
Yeah.
I'm pretty sure negative rates will come. And that's because this is a one-way street. I can't see a way back unless, and this takes us into another very broad discussion, unless you have some fundamental reset or restructure of the economic fundamentals. And that's where some of the World Economic Forum stuff, which we can go into if you want, is scary. But that's why some people are now saying there has to be a reset.
Yeah, I mean, what is the Old Testament had a debt jubilee every 50 years. I mean, but this is the path I go down, right? I look at
Yeah.
these things. It's widening the wealth inequality gap.
Yep.
It's every scenario I kind of go through, it's like, okay, well, we'll just keep pumping this debt bubble until you can't, and then basically it ends with pitchforks and torches and some sort of reset. And it's crazy to hear that the exact same thing is happening in in Australia, which, yeah, it's not the biggest economy in the world, but like, I look at the US and it's like, oh man, this is a disaster. It's the death of fiat money. Everybody else is in the same boat, which is
Mm.
even more terrifying, right?
Yeah, this is a planetary thing. I would say that most economies around the world, and even if you look at Japan, if you look at Japan, big example into the future, but even China, the superficial numbers in China may not be bad, but they're buying back bonds and they're actually supporting their banking system and they're reducing their capital structures to support the Chinese economy, right? So there are still some of the same things going on over there too. So pretty much wherever you look amongst more advanced economies, you got the same old, same old.
It's true. And I mean, so talk to me a bit about the World Economic Forum and what they're talking about and why that's something that's so terrifying for you. Or maybe it's not
Well,
terrifying. It's this new world that's going to
well,
solve everything, right?
it, yeah. Well, look, I mean, I suppose it depends on what you think a reset might look like, right? And there's a clear set of arguments that I would say what's happened over the last 20 odd years, economically speaking, has been a disaster for the majority of people around the world. Because what you've got is you've got a concentration of wealth in an ever smaller group who've done very well. But if you look at the wealth distribution, it means that those with assets, those in the financial markets who are being supported by the central banks are doing really, really well. No wonder stock markets are relatively high at the moment, but everybody else not so much, right? So there is a fundamental problem with the way that the system is working. That system, which is controlled by central banks and central bankers, and whether you put it down to groupthink because all the central bankers get together and talk to each other under the BIS, or whether you think there's something more sinister. I personally think it's groupthink. I think it's just the way that they think because central bankers have a particular way of thinking. They are actually partly to blame for this. And the worry I've got there is that central bankers are not accountable to anybody if you look carefully, right? Because they are carefully separated from governments. And I don't know what it's like in the US, but the central bank guys go and sit in front of Parliament, and the Parliament asks them a few gentle questions. We call them Dorothy Dixon type questions in Australia. In other words, ones that really are not particularly hard to answer. They never ask the really hard questions, right? So the central bankers get away with murder, right? So that's been what's happened, right? So there is a need, I think, a need to think different about it. Now the question is what the World Economic Forum is saying then more than that, and is it sinister? And it depends on how you go. So there was an article published a few years ago. It was actually an article written by a Scandinavian politician who basically talked about you won't own anything, you won't need to own anything because basically it'll be on demand, right? And they talked about using AI to be able to service people's needs, et cetera, and it was a sort of a utopian view. And it's interesting that when that was first published, it was sort of trumpeted by the World Economic Forum. Have you noticed they've changed the title of it, and they've sort of said, well, this is just one scenario, one example, right? But what they were doing there was highlighting how the combination of digitalization, the combination of the sort of the digital change. So, for example, you don't need to own a kitchen; you can just have a frying pan delivered when you want to use it. It was the sort of the example. Now, you could argue that that's just sort of a nutty sort of way to sort of think about a future, right? But I worry that the combination of digitalization, the combination of the concentration of debt and the concentration of wealth and all those things could lead us to a situation where the likes of the World Economic Forum and their connections to Davos, and by the way, I always get Davos and Davros muddled up. I don't know whether you know Davros, but if you follow Doctor Who and the Daleks, right? Davros was the guy who actually created the
No, I
Daleks.
don't.
Well, Okay. The Davros was the founder of the creator of the Daleks, right? Well, and Davos is this sort of group of very powerful rich people who get together and talk about the future, right? I wonder whether there's a coincidence. I'm not sure whether there is, but I think it's quite interesting. So I'm worried that these powerful people, these rich people, these affluent people are going to be trying to dictate a future which effectively is sort of coming top down, come down through central banks, come down through, and we won't have a chance to really debate it locally, right? So I'm very worried about that. Now, I also think that if you bring into the mix then, and Prince Charles is a good example of somebody who's saying we've got to think about the environment and, eco as well, because we are on this one sphere, right? This one arc, and we're part of it. It's not like it's us versus the Earth. The Earth is us. So if we actually take the the Earth into an area where effectively it becomes uninhabitable, then we kill ourselves. So we should be taking that seriously too. So there are clearly some big questions to be asked about how does economics work in the future? How do economies work in the future? What's the right degree of personal freedom, local freedom, and international coordination of some of these big questions? But the worry that I've got is that people are jumping to a particular solution where they use technology and they use central planning, and this feels more and more like communism and control than anything else, and that worries me. And yet it seems to me that maybe because of the virus and maybe because of everything else, that people just seem to be sort of sleepwalking into this future of digitalization, digital money, right? So for example, so what happens if suddenly, like in areas of China, where they're using digital money, right? And they're actually giving out digital money. But then, of course, digital money means you can associate it with a social score. You can be controlled. It can be turned on. It can be turned off.
Turned
You've
off
lost another
completely.
Freedom,
It can be blocked and censored for certain ways. It's
yeah, correct. And I'll give you another local example. Last year in Australia, we had an attempt by the government to ban cash transactions above $10,000 between businesses and individuals, right? And it was brought in as an initiative to, deal with anti-money laundering and those sorts of things.
For sure, always.
But the truth was that this was essentially a removal of a civil liberty that we have today to be able to settle in cash if we want to. Now, we actually launched a resistance movement, partly through this for the DFA channel, right? And we actually got 3,500 submissions to Parliament, which was probably as many as they've ever received on any issue ever, right? And then through a series of hearings, it finally got killed. So we have no cash ban in Australia. And that's an example of democracy in action, right? Now, that took a lot of time and effort, a lot of people on a lot of YouTube channels, because the formal government processes just didn't work, right? Now, that is what I'm on about in terms of there are things that if we're not careful are just happening to us, and little bit by little bit by little bit we're giving up freedoms, we're giving more and more accountability or responsibility to some autonomous authority, be it local or global. That is what's going to happen unless we stand up for it, unless we actually say no, freedoms have been hard won over generations, right? And we're not just going to sort of turn around and say, oh, that's fine, feel free, just, And that's why I get really twitchy with these lockdowns that we had in Australia with the virus, right? Like I said, civil liberties were actually crucified in the process, right? Now we rolled over, but I wonder how many of those we rolled back. So we're, I think, at a very precarious time in our evolution, right? Because on so many fronts, we seem to be hitting the boundaries between inequality, wealth versus those who really don't have enough to get by, the digitalization of everything and the control that leads to. And I also am very concerned about the broader environmental and social issues that they create too. So there are huge big picture issues here, right? And my worry is that what we end up doing is dealing with the spot fires rather than actually the strategic picture. And I said I was a philosopher, right?
Yes.
I want to know what our future is going to be. And I want us to have a debate about what that future should look like and what controls we are prepared to accept and what controls we aren't prepared to accept, and how much government, debt and spending is appropriate, rather than it just being dictated to, which is what's happening at the moment.
Well, yeah, and it's I mean the frog in boiling water analogy is completely incorrect, but that's the way
Yep.
that I think about it. Is like these little things, and I actually thought they'd use the coronavirus as a opportunity to ban cash. It's like this cash is so dirty, it transmits the virus. We're going to push this digital only version, and it's kind of
It's happened in areas in Australia. There are some
yeah, and it's gonna
retailers
happen,
who are
right?
not
It's gonna
taking cash.
push
Yeah.
it further and further, and it's an easier way to push UBI
Yep.
and stimulus and fiscal policy. It'll be so much more
Mm.
efficient, and it's like dangling the carrot, and you're just you're giving up all of your financial privacy and eventually even more privacy, because the ability for some government to shut you off completely when it's
Mm.
completely digital, that gets real big brothery and not very fun.
Well, what's interesting here is that we've had a removal of press freedom and personal freedoms over the last 20 years in Australia, right? Now, when I first came to Australia, I felt that Australia was a relatively free and open society, but little bit by little bit by little bit, thanks to risks of terrorism, and all of those things and bad things that happen, it's little bit by little bit, things are being eroded, right? And I don't think there's a complete blueprint from soup to nuts. Some people have argued that there is. I don't think there is. I think this is just an incrementalism, but the trajectory of that incrementalism is what concerns me, right? Because every time we lose a bit of freedom, right, it's going to be really hard to pull it back. And every time we've lost a bit more, the analogy I sometimes use is it's like the sea coming in and eroding the cliffs, right? Little bit by little bit by little bit, the cliffs get eroded, and you come back 10 years later and, oh, I've lost 12 meters of land. Well, that's how I feel about what's going on at the moment.
100%. It's like a glacier melting, right? I mean, every year you look at it, it looks the same, but you look at a picture from 50 years ago, and it was a lot bigger then, and it's
Mm.
very drastic. I'd
Mm.
I'd be curious. I mean, so all of this stuff is pretty dire. I mean, the World Economic Forum. I mean, it has a go to weforum.org/Great Reset. I mean, people are talking about this.
No.
I mean, it's almost impossible. You can pick up the little breadcrumbs, but it's almost impossible to know the entire picture and what it will look like. But I mean, if you there are things like MMT that are popping up. Like, what are you kind of thinking through the way of some global Bancor and global centralized government? Like, walk me through how you're thinking through this.
Yeah, I mean, there are people who believe that there is a blueprint, a globalized blueprint that's sort of there somewhere and is being rolled out. My own view is I think that's relatively unlikely, simply because I just don't see how that necessarily formally would happen. But informally, right, little bit by little bit, as people get together and talk, and as central bankers get together and talk, and governments get together through the G20 or whatever, you can see how the components could almost by accident end up in that direction, right? And frankly, with totalitarian people in power, look at what Trump was doing until quite recently. Other places, even here in Australia, we've got a more dictatorial spirit coming through at the moment in our leaders than previously, right? There's much less feeling for consensus, much less taking us with what's going on. It's more sort of do this, do that, jump here, jump there. So there is a tendency to sort of to follow this through. So I'm of the view that there is certainly a risk of some of these things falling the wrong way, and essentially the combination of the digitalization that I've mentioned, the globalization that I've mentioned, could lead to things like a currency that, what's after the dollar, right? And Mark Carney, a couple of years ago, used to be the guy at the Bank of England. He actually made a speech at Jackson Hole saying, well, the next, currency after the US currency might not be yuan, it might be a digital currency, right? Now, if that's the case, it could be a global thing, right? And if it starts getting global, then you've lost another element within the way that economies actually work and the autonomy that are locally. So there is a risk. There is a risk that some of this globalization stuff and some of this top-down stuff, and I have to keep saying, well, who is the World Economic Forum and the United Nations and some of these other large organizations? Who are they accountable to? Right? Who's actually keeping them in check and under control? Because it seems to me it's coming the other way around, that they're actually publishing these missives and saying, well, jump here, do that. Bank for International Settlements has imposed capital adequacy rules on banks around the world such that lending to small businesses is more capital intense than lending for mortgages. No wonder then that banks prefer to make mortgages. I mean, there are consequences for this top-down governance control. And I just worry that we've lost the plot.
I completely agree. And I mean, with all of these factors and these big moving pieces, how does one think through the investment decisions you're making now? I mean, some of these things, it's like, okay, well, I buy a bunker and a bunch of gun and non-perishables, right? Like, because that's a scenario. But like, I don't want to go down too dystopian. Yes, this is a bit Orwellian and Big Brothery, but like, how do you think through investment decisions taken now with these facts in play?
So I think there's a few observations, and I don't give investment advice particularly, but the fact is you need diversity in any investment strategy, right? And ever more than ever, I am really worried when people tell me, well, I've decided to put all of my savings into Bitcoin, right? It's gone up so much, I can't lose. Well, maybe, but what happens if you're wrong, right? So I do think there's a really important place for diversification. I also think that the chances are that we're going to see the financial markets have a significant hiccup ahead. I don't know when that's going to be. I don't know whether it's going to be the next week, the next month, the next year. My feeling is, with all the central bank support, it's probably going to be months or maybe years away, but it could be wrong, right? So at some point, because the valuations are totally stretched. If you think of any stock at the moment in the market and look at future earnings growth, which is how you normally would value stocks, they're about 40% overvalued on average, and there are some even more. Tech stocks even might look at Tesla, for example. So you've got to think that the logic about the search for value is actually quite different from where it was. The other point to make there is that, of course, it's the tech sector that's done really, really well over the last few months, particularly with the virus. And the question is that going to continue? Well, recent wobbles suggest maybe not, maybe not. There are some sectors that are out of favor at the moment. Well, maybe they'll come back. But then how quickly will the airline industry, for example, or tourism industry come back? Well, depends on the virus. So there are significant risks. The other point to make is that with savings rates so low, I mean, I don't know what term deposit rates are in the US, but here you get almost nothing now if you put money in the bank. And so people are being forced out from holding money in secure bank environments, even if there's a risk of bail-in, which is maybe low, maybe high, but they're being forced out into the market. And in fact, the Reserve Bank here keeps saying, well, people are going to have to take market risk. So they're being forced to play that game, and I think I'm concerned by that as well. So diversification is pretty important. I also think that you've got to be really careful. Going back to the spruiking point, nobody can tell you how this is going to turn out, right? There are too many variables. There are too many countervailing factors. So anybody who says future's gold or the future's crypto or whatever it is, right? Nobody knows, right? So the level of uncertainty that we have is probably as high as it's ever been. And that suggests to me that there needs to be a little bit of conservatism in terms of an investment strategy. As I say, spreading the risks. And also, I guess you've got to ask the question, are you thinking of investing to protect the assets you've got or to try and trade in or create growth, right? Because, there are people who've done quite well with Bitcoin over the last 3 months. If you bought it then and sold it recently, then you've probably done quite well. The question is that repeatable? And, that's another question. So there's a bunch of really big investment questions. It's really complicated. And what I say to people is anybody who thinks that there is a simple formulation and a simple answer to this are just deceiving you. There isn't.
Or they're just missing a lot of it, right? They're just not thinking through a lot of these things, which sometimes
Yep.
is the case.
Yep.
Yeah, I think that's very sound advice, and yeah, it's pretty scary out there. I'd like to pivot perhaps a bit and talk a bit about Australian investors and the way that they approach investing and the mindset and
Yep.
diversification and
Yep.
things like that, and how that might be different than like the average American investor.
Well, let me start by telling you that we are probably some of the largest, most sporty gamblers in the world. Right, we have a large number of what we call pokey machines here. You know, those things where you go into and you pull the lever and you see whether you get 3 lemons or whatever. Right, it's amazing how much money is spent on those and on the horses. So
Really?
Australians are gamblers by nature. Now, perhaps you could argue that this is a consequences of the being shipped out from around the world. Criminals and all of those. I don't know. But so there is a very strong gambling, wagering sort of thing here in Australia. And so people quite often will take short-term decisions on the hope of making a profit, right? And that has been quite surprising to me because I'm not wired like that at all. I was brought up in the UK. My father was a bank manager. I've always tended to be rational, but go through it and really think it through, right? So I just watch some of this stuff and think, you've got to be kidding, But so that's the first point. Second point is property. Property is the number one asset class in Australia for most people. They believe that that's where they make the biggest returns. I mentioned the doubles in 7 years, even if the data doesn't support that. So a lot of people will go into property first. A lot of people will also go into the stocks, not necessarily local stocks, some international stocks as well, because of the relationship between that and the US dollar and those sorts of things. But we're also seeing now an interest in gold. So we have some gold miners in Australia and people are buying quite heavily into the gold miners as well as the gold price. And recently crypto has become really quite big here. We have a lot of people, even a lot of boomers now buying crypto. Bitcoin mainly, but not only Bitcoin. And so we're starting to see that coming as well. So what I'd say is there's a lot of confusion amongst investors. There are a lot of people banking a lot on particular asset classes, assuming that that's the right way to go. Like diversification isn't necessarily something which is easy to convince people to do at the moment. And the other point to make is we have a superannuation system here, which is a forced superannuation system. We are forced to save for our old age, right? Now that money is a separate pot. If you're working, a certain percentage is taken out every month and goes into your super. So a lot of people have superannuation. That superannuation is then invested by large superannuation funds into all sorts of things. So as well as the local investors, you've got these institutional investors and the superannuation investors. So the thing that people don't get is you're often competing as an individual investor with the superannuation funds who have huge reach, huge capability and capacity, but also tend to net average around the index. So it's quite difficult sometimes to be able to get a return that's better than the index as a result of that because of the relative concentration of the superannuation funds. So that's sort of in a nutshell the way it goes. We have close to 3 trillion in superannuation. That's 3 trillion Aussies. And it's interesting that one of the initiatives going right back to the virus, they allowed people to draw out $10,000 from their superannuation last year and this year, and 40 billion of super was pulled out. So a lot of people decided to pull the money out and just use it rather than actually save for retirement because they could, right?
Well, maybe that's the speculative nature of the investment, right? I mean, if you have this superannuation, this thing that's going to take care of you in your old age, it's like the money that you're investing today is more of play money, and then it has these bigger instant gratification and social media as everybody's making millions of dollars.
Well, actually, a lot of people lose that money from superannuation to go and put a deposit on a house.
Well, I mean,
So,
real estate prices only go up. It's a sure bet, right? But are the
yes. Well,
superannuation funds investing in Australian real estate as well? I mean, it almost
yes,
sounds like they would have
that's
to.
feasible.
Yeah,
That's feasible. Yep, absolutely. And some do, and some have a lot of their superannuation in property and super funds. Super funds are basically separate, legal entities, so they're actually managed differently. And there's also a thing called a self-managed super fund, which is basically where you manage it yourself.
gotcha.
So
It's
basically, you basically have your own portfolio that's separate from your personal wealth. And so that's been growing quite fast as well. Although a lot of people are actually, if you look at the returns over a medium term, they tend to perform less well than many other funds. But there's also worth saying that some of the big, what's called retail funds, the ones run by the big banks, underperform dramatically because they have high fees and they tend to trace the index or below. So it's a really complex environment. And it's interesting that the level of knowledge and experience and understanding and education in in an Australian context and for Australians is very low. So there are a lot of people who really think they're experts in investment and they're not, they're traders.
nice. Well, people like you doing fighting the good fight, helping people understand this important
That's what we're
asset
trying
class
to do.
and some other aspects, right, that are coming into play. But
Yeah.
holes
Yeah.
in houses, I won't forget that one. That's a really easy way to remember the Australian economy.
That's what Australia is, houses and holes.
This is going to be the new mental model, the lens at which I look through that part of the world, unfortunately or
And,
fortunately.
and and if you added poisonous
Well, yeah, things
snakes
that
and
are trying
other
to kill you
animals
in
as
the night.
well, then you've pretty much nailed Australia.
Yeah, well, that March trip, that was going to be my first trip. I was actually really excited, had a whole thing, but
Mm.
the virus had other plans, and now I'm back in the US, so the other side of the world. But Martin, I've really enjoyed this conversation and a quite philosophical discussion on where the world could go. It's certainly not an easy answer. And it's
Well,
pretty unknowable at this time, but I enjoy talking about the factors at play, and it kind of lets your mind wander on where potentially we could go. So yeah, I really, really enjoyed the conversation. Wanted to just give it over to you. Where do you want my listeners to find out a little bit more about you and what you're doing?
well, thank you for that, and I enjoyed it too. And look, you're always going to get philosophical stuff from me because I keep asking the next question, the next question, and some people find that really uncomfortable. Philosophy is uncomfortable, but actually, from that uncomfortable journey can come more lasting and deeper truth. And in the current environment, I think that's what we need. Now, if you want to get more about what I do, my main channel on YouTube is called Walk the World. And I post daily there and discuss a lot of these things so that we have philosophical discussions, we have data-driven discussions. I also have a blog at digitalfinanceanalytics.com, and I post a lot there. And I'm also on Twitter as well at DFA Analyst.
Awesome. And I'll link all of those. Really appreciate it, Martin. Really, really had it. Enjoyed this.
Well, I enjoyed it too. And keep safe and keep watching the skies, huh?
Thanks. You too. There you have it. Thank you for listening. I really appreciate your support. Show notes, transcript, links, and more can be found on our website at altassetallocation.com. If you'd be so kind, please share this with anyone you think might be interested or get some value from this conversation. If you have any questions or comments, please reach out. I'm always happy to hear them. Lastly, if you're on YouTube, please like the video or subscribe to the channel. If you're listening to the audio version of this, please subscribe to the podcast and or leave a review. This really helps more people find the podcast, and I really appreciate it. Thanks again, and hope you have a fantastic day. Happy investing.